the balance sheets of mining companies becoming ungeared over the last 3 years. So post 2008, the crisis, we've seen them steadily lowering their debt on their balance sheets and slowly but surely building up cash on their balance sheets. What that means is that the larger companies are capable of raising some more debt, and certainly our survey respondents indicate that they are prepared to take on more debt than what they have right now onto their balance sheets. Second of all, I think it makes a change in terms of how M&A is being done, in that we're likely to see more cash settled deals than necessarily than equity settled deals.
With an increased appetite for M&As, how does this set up miners into the future? What does the outlook look like?
Well, I think our survey respondents indicate that there is around about 40% of them are likely to do a deal in the next 12 months. That said, we're seeing people taking increased time and certainly doing far more due diligence on a transaction before they move ahead and close. That said, the respondents also indicated that they are comfortable that it is possible to close deals and in this current market.
And then there seems to be significant activity from Chinese and Indian buyers into South African and African mining projects. How does this bode for the mining industry in Africa in the next couple of months?
Well, I think what's happening is that we're seeing this demand, as you say, from Indian and Chinese buyers. We've seen it in our particular practice in the gold space, but also in commodities such as coal and iron ore, and this demand will continue. That said, we need to look forward and understand what is going to happen in terms of the slowdown potentially in the Chinese economy. We've seen the slow growth in India, but when one takes a longer term view of the mining industry and understands that the demand for commodities will continue for many years to come as cities grow bigger and as populations urbanize and there's greater industrialization, the demand for commodities will continue in the future. And so we would expect to see those growing emerging markets continuing to have a strong interest in commodities in Africa.
And then lastly, if the BRICS countries does not perform as well as was expected, how does this play out on the mining industry?
Well, certainly if we see a slowdown in the BRICS countries, that has a concomitant effect on the demand for commodities. And so a simple example would be a slowdown in demand for platinum group metals. As you know, these are industrial commodities that are used in, for instance, cars and trucks. And if there's that lower demand for automobiles globally in these strong emerging markets, we would certainly expect a slowdown in demand for the related commodity. And of course that flows through into iron ore as the steel that's being used in cars, etc. And certainly we would expect to see that there is a direct correlation between the growth rates in emerging markets and commodity prices and demand.